Hi, today I just wanted to talk about a job that I applied for a few months ago, and they've constantly been throwing this job back onto the LinkedIn, Glassdoor, their homepage. So I just kind of wanted to go over what this interview was like and what this job kind of entails, right? So this is a job from TD. It's an underwriter too, and they need a lot of people in this position because what underwriter two does is they also call it a credit analyst. So what credit analyst does is they approve and decline loans, right? So down here it says ensure all credit decisions approve or decline within assigned limits. So you're trying to approve and decline loans at the branch level, at the retail banking level, and they write a bunch of loans and stuff. Sometimes they don't have the ability to approve or decline a loan right then and there. They need the help of these credit analysts to actually go and dig deeper into the client's history and see if it is a good decision for the bank or not. So some of the interview questions that the interviewer had for me is number one, it's always big. Why did I choose TD? Now this is a very, very difficult question, and it's also a very awkward question. Not many companies nowadays go around asking why you choose our company. One thing on one hand is people need jobs, right? And in the huge unemployment market downturn, people need jobs to pay their bills, they need jobs to live, right? So throwing why you are choosing our company instead of going straight into the other questions is a real I wouldn't say curveball. You would still have to expect some companies to ask you that, but I would say it's a real gnarly question, right? You would have to fake or make up an excuse on why you want to work at their company, right? So, for example, if you were thrown that question, you would say, "Oh, TD's pretty big. I have a lot of friends that bank with TD." You gotta give them something, right? It's like a dog trying to find a bone. You gotta give them some kind of bone to bite on, right? You got to make it believable. So that was the first question. Why did you choose TD? The second question was, tell me a time when you worked together as a team to solve a problem. Now, this question here, it differs a lot between person to person. You just kind of have to be prepared to answer these questions on the fly, right? You need to have a myriad of scenarios in the back of your mind, prepared to counteract these problems, and you have to counteract them right? So you can't just give them you can't just fabricate a story, right? If you fabricate a story, you have to make sure that all your points are mixed with truth, so that it's really hard for the interviewer to know if you are speaking the truth or if you're lying. If you're mixing lies within truths, it's really hard because some of it is true, some of it is false. As an interviewer, they don't really have the opportunity to get to dig even deeper into that because remind you they only have 15 to 30 minutes to complete their interview, and then they move on to the next applicant, right? So they won't be digging so deep into what you are saying. You just have to make your story believable, pretty much it. The third question is, tell me a time when you analyzed the situation to help the client. So for this case, what they want to really see, because you're doing a credit analyst, you're applying for a credit analyst role, they want to see how you analyze, how you use your analyzing abilities to recommend certain things to clients, to help clients pass through the approval or decline situation, right? You need to search up scenarios, or you need to physically know some kind of scenarios and then twist it to make it sound right, right? To make it sound correct. So one example would be a client comes in really heavily in debt, and they want to take out a large loan from their home line credit. So home line credit, normally the ratio for the rate for home line credit is lower than, let's say, a credit card or a car loan or something like that, right? So the first thought that you would do is, okay, the client comes in, takes out a lot from their home line. This is the correct decision, right? This is the correct decision to make. So instead of continuing the story like that, you should say they're trying to do a cash advance, but then you discovered they had a home line equity which they can take out of instead, because cash advances are more, the rate is higher than a home line equity, the rate, right? So if a client comes in and you find out that they have a home line equity and a credit card, and they're trying to do a cash advance on their credit card instead of using their home line equity, you can say, I analyzed the situation and told the client that instead of using your cash advance on your credit card, you should instead take out money from your home line equity, because the rate will be lower and you won't be put too much further into debt than you are now. So this is the correct way to falsify a story, to make up a story that didn't happen, but it's believable because this situation happens all the time. Clients don't understand the difference between a high rate, such as a credit card cash advance, and between a low rate, such as a home line equity, home equity line of credit, right? So you need to make the story believable while patching in lies such as this. If you were to flip the two situations over, saying, oh, the client came in and was trying to take out money from their home equity line of credit to pay down their credit card, that's normally what the bankers, the tellers themselves would do in a situation like this. So there is no analyzing to be done. There is no benefit to the client for you to suggest something else, right? So in that case, if you answered home line equity, that client was trying to borrow, then your whole situation is wrong. So the interviewer will pick that out and immediately know you are unfit for the job. So you have to think and make up situations on the fly such as this in order to make sure that your lies are kind of true in a sense, right? And the fourth question is, they ask, tell me a time when you solved an uncomfortable situation with a client. So this happens all the time because you're dealing with clients and it is retail banking. It happens all the time when clients are unhappy about whatever you did, or it might not be what you did. It might just be what they did, but they don't want to admit it, right? So you have to think about a time, whether it's in banking or it's in retail, let's say you're selling clothes or something like that. You have to fabricate a situation that is kind of true and will most likely happen in a real world situation. So this is kind of like storytelling. You have to make it compelling. You have to make it sound as if you are talking from your personal experience. Did this case happen before in your own job experience? Not necessarily. Will it happen in the future? Probably. So you have to kind of storyboard it yourself and look through job descriptions such as this and kind of be the interviewer yourself, right? So if you're the interviewer and you're looking at this job description right here on the screen, what would you ask the potential applicant, right? So these 4 questions were just the first 4. The others, I don't really remember, but it gives a pretty good outline of what type of interviews a credit analyst, an underwriter position would be asking, right? So some of the questions that I asked the interviewer, because after the interviewer is done with asking their questions, they always ask you, do you have any questions regarding this job? Now, this job was all over the place. The very first time I looked at this job description, it just felt like HR needed everything, right, from this one job. And that's most jobs nowadays, I would say. HR just slaps on everything and makes it really confusing, right? Because they have, in the key accountabilities, they have customer, shareholder, employee, team, and then they have job requirements, right? Like they're trying to make this kind of like programming, like they got breadth and depth, and then they got all these fancy keywords, all these things. It's like you're trying to work, you're trying to find a job. You don't really care about what all of this does. You just need to know, okay, so what do I need to do, right? Like that the team, sure, the shareholder, sure, the customer, sure, but like how are, like, it explains too much in a sense, right? Because the first question I asked was, okay, you're trying to analyze credit, right? That's what you're doing. You're trying to approve and decline credit. But then down here, you can clearly see it says create exceptional customer service through established programs and contribute to the ongoing improvement of the customer experience within the business area. So after reading these two, it's also in your key accountabilities. Does that mean that you have to go out there and market yourself, be positive, be part of the company, and create customer experience? You're trying to analyze credit, right? Obviously, like if this person isn't gonna pass, they're not gonna pass. Right now, this is a very, very gray area, right? Banks on one side love to hand out loans as much as they can because these are the bread and butter of banks. This is how they make money. They want to put you at the edge of bankruptcy, but not so much bankruptcy, right? So they push you to the edge of bankruptcy, and then what they do is they offer you a credit consolation, right? They want you to consolidate your loans, right? So it's not going to be 22 or 29.99 or 19.99 now. It's only going to be 10 or 15, but don't get me wrong, it's still a rate you have to pay back, right? So they want to push you to the limit, to the very limit, in order to gain more money for the bank. This is their business model. I don't judge, but as a credit analyst or as a banking advisor or as a financial advisor working at any of these big banks, you do not have any fiduciary responsibilities, which means that if you give the wrong recommendation or if you do anything incorrectly, as long as you abide by the laws, you cannot be held accountable for the actions that you have done to a certain client, right? So if you gave a bad recommendation and the client somehow goes bankrupt and the client comes back and say, hey, we want to sue you, you're not responsible for that, right? This is the scary part about this kind of job, right? Now they're probably going to take down this job very soon because on their TD website they took down this job already, probably found someone willing to do it. So basically you just approve credit. It's a call center type of job. You have to contact with the front office, contact with the back office, ask if this can be approved, this can't, why is this like this. It's more like aside from analyzing, you also have a lot of other responsibilities, right? So they want you also to act as a brand ambassador. So in your free time, you also have to talk good about this company. You also have to participate in their events in order to move up. If you don't want to move up, you can segregate yourself and just not talk to anyone. But in banking, communication is really key. You want to make and network is also key. You want to make as many friends as possible while creating as less enemies as possible, right? And it is like Wolf of Wall Street. Everyone is there to make friends, but the moment there's an opportunity, you're the first one to be dropped, right? So it's a shadow dagger kind of game. But that's all I have for everyone today, and I hope to see you guys in the next video.